Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
This week's economic calendar is absolutely jam-packed full of Black Star events. Coming up this week, Friday's US job reports for February will shed more light on the strength of the labor market, and traders will be watching congressional testimony from Federal Reserve Chairman Jerome Powell for fresh insight on the future path of interest rates. Friday's NFP report for February will be the last before the Fed's upcoming meeting on March 21st and 22nd, and takes on extra significance after January's blowout report prompted traders to re-evaluate expectations for the future path of the interest rates. Expectations are for the economy to have added 200,000 jobs last month, moderating from January's blistering job growth of 517,000, while the unemployment rate is expected to hold steady at a more than 5-decade low of 3.4%. Before Friday's job report is however released, Powell will be appearing before Congress to represent the central bank's semi-annual monetary policy report. He will be testifying before the Senate on Tuesday and the House of Representatives on Wednesday. His comments will be closely followed for hints on whether a larger rate hike is under consideration this month after recent data pointing to still persistent inflation. Powell has said the January job report showed why the battle against inflation will take quite a bit of time. Additionally, this week you can also be on the lookout for interest rate decisions from both Australia and Canada. Australia's interest rate decision will be released on Tuesday at 5:30 South African Standard Time, and the Canadian interest rate decision will be released on Wednesday at 5 o'clock in the afternoon South African Standard Time.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the US dollar slid from a 2.5-month high versus the Japanese yen last week. The dollar index also posted its largest weekly loss since mid-January as traders stepped back to gauge the path of the Federal Reserve policy. Analysts have said that the market has for the most part priced in the prospect of a higher terminal Fed fund rate after the recent run of upbeat US economic data. Looking at our analysis on USD JPY for today, we can see that USD JPY has currently on the lower timeframes enter into a bearish market. Should this specific currency pair be able to stay below 135.8, we could see this pair declining even further back down to our primary support level at 134.4. However, should this break back above that rate of 136.3, we could see this pair rally back up to that primary resistance level at 138. Now let's move over and see what's making headlines on Wall Street. Wall Street rallied on Friday at the end of a volatile week with the S&P 500 snapping a 3-week losing streak and the Dow Jones Industrial Average posting its first weekly advance since late January. After rebounding sharply in January, bonds and equities retreated in February as traders fretted that the Fed will push interest rates higher than previously expected and keep them elevated for longer to beat inflation. Having a look at our analysis on US 30, today we can see that we are currently hovering within that resistance zone around that 33,400 level. Should this resistance however be broken and we can get a nice close around that 33,450 level, we could see this pair rally further all the way up to our next primary resistance level around that 34,200 level. Now let's move over to commodities. Oil prices found support on Wednesday last week after data from the Energy Information Administration revealed a 1.2 million barrel increase in US crude stocks, which was the smallest increase since the week ended January 20th. The upside potential may however be constrained since high inflation data fuel expectations that central banks around the world would continue to tighten monetary policies aggressively. Oil prices retreated this morning as a weaker than expected GDP forecast from China dented some optimism over a recovery in the crude demand this year, while markets also hunkered down before a slew of cues on a US monetary policy this week. Looking at our analysis on crude oil today, we can see that on the 4-hour time frame, our pair is currently in a bullish momentum. Should it come back down to that 8 EMA, around that $78.5 a barrel, and we can see a nice rejection there, we could see that this pair could then rally further all the way back to our next primary resistance at $82 a barrel. However, should this level be broken, we can also then expect it to come back for a retest on our primary support level at $77 a barrel. And finally, let's finish things off with gold. Gold prices were aided by a drop in the dollar last week, rallying more than 1.9%, breaking a 5-week losing spree as traders reassessed their expectations for the US interest rate hikes this year. Having a look at our analysis on gold, we are currently hovering around that 1854.5 level. Should we, however, stay above this specific level, we could see this pair rally today all the way up to our next primary resistance at 1860. And should that be broken, well, then we'll have to see what happens during the rest of the week. However, please remember that with all the economic data being released this week, markets will be volatile and your trades could be at risk. So always secure them using stop loss orders or additional risk management precautions.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.